Hello, everybody. Welcome back to my Daily Dose with Tim. Today is season 3, episode 34, and it is also part 4 of how to execute lease options the right way. And today we're going to go into the very first portion of the deal analysis. So I know this is something that a lot of you guys have been waiting for, unless you've already watched the previous seasons. And yet, for some of you who have already watched the previous seasons, you said you still want to really follow the new thought process along. And so I know a lot of the times, depending on everything that is changing out there, I do share a little bit of different perspectives as well. However, just so you know, the deal analysis portion doesn't really change all that much, because that's the beauty of financial education and understanding every single strategy to its core. Because so many people, they are always asking, well, I don't know, are there certain strategies that are better in certain markets? The high-level answer typically is no. Every single strategy fundamentally should be applicable in every single market. And this is something that I've really learned over the last 13 years at this point, having invested across the globe and also trained and mentored across the globe pretty much, is the fact that investing, again, which is financial education based, is learning how money works, is universal. It's international. There's no boundaries. It's not bound by borders. However, real estate, because it is the vehicle that we've chosen, or the asset class that we have chosen, real estate is extremely local. And so if we were to really break it down, then the answer could become a yes. So for example, in Canada right now, me personally, I would always say that I will hesitate to actually hold title or having a company of mine own a property and actually being on title of that property, simply because of the Residential Tenancy Act. So that basically rules out single families and all multi-family property investing for me. Why? Because it is very much, and by very much, I mean extremely pro-tenant. And what that also means is when you are stress testing your deals, there will come a time and there will come a point that these markets just don't make sense anymore. And so that's my personal take and that's my personal opinion. However, this is what I really want to stress with everybody about the fact that all strategies, fundamentally speaking, is applicable across the globe. And that's really what I aim to share and what I aim to teach everybody. At the same time, though, the subtle nuances that comes from being or operating in the real estate space as an asset class, as an investor, it tends to say that, well, not every single market is the best suited. However, I can appreciate and understand, just like right now, we have trainers and mentors and coaches on the Trust Your Talent team who live in Ontario, who invest in Ontario. And so they understand how to stress test their own deals. And what that means is it may be harder and longer to find a deal. However, once they do have one going, they know that they are mostly still protected. Okay. And so that comes down to A, your own business decision, and B, your level of risk tolerance once again. So these are the two very crucial factors that I really see a lot of amateur investors overlook, because they get so fixated on the asset class itself. And even though the numbers don't make sense, they don't actually look at it. So I want to make sure that you're not like that. Having consumed so many different episodes of my Daily Dose with Tim, it is not about collecting doors. I'm seeing a lot of people posting on social media about, I'm looking at 60 doors, I'm looking at 20 doors, I'm looking at 200 doors, I'm looking at 400 doors in New Brunswick, I'm looking at Texas, I am looking at all different cities and markets, and Florida. Doesn't matter. Okay, it has nothing to do with that. Remember, we are learning to become more financially intelligent so that we can continue to feed our bank account first and foremost before we feed our ego. Okay, that's the thing. We want to feed our bank account first before we feed our ego, because when you feed your ego, I can pretty much promise you this, it's only a matter of time that you're going to lose a lot of it, if not all of it. Like, I've seen way too many people come and go just because ego gets the best of them because it is a beautiful, shiny, flashy asset class. Okay. And again, I'm also investing in businesses as well as stocks and futures and options right now. And it basically, the fundamentals are all the same. And I just want to really share that because a lot of you guys had some questions around that. And, like me, I tend to overshare, but I just want to make sure that nothing's really taken out of context. And this is why, again, personally, I enjoy going through some Instagram posts and sometimes TikTok. I probably go on TikTok once a year or twice a year, if at all. However, the point is though, like I do find a lot of the financial training or financial knowledge materials to be quite irresponsible because a lot of things are really taken out of context. And so I just want to make sure that if you're watching this, I appreciate you because I understand you understand for yourself that when it comes to the subject of money, investing, real estate, your financial goal, and securing your income sources, all these things are very much intertwined. And so what that means is it is not one size fits all, and it's never about a universal statement. So I want to throw out all these different thought processes and different perspectives for you to build context. Okay, so coming back here now, deal analysis part 1. I always say, like a lot of things that we do, okay, and an educated and professional anything, not just a professional investor, an educated and professional person, whatever the field that they are in, is we are always trained to think from the end goal in mind, okay, to train with the end goal in mind so that we can properly plan the path and the steps from right now all the way to where we want to go and where we want to be. It's no different than how athletes train. It's no different than if you were to get a business coach or a fitness coach. It's always about having that end goal in mind. And so what is the end goal when it comes to executing a lease option the right way or rent-to-own program the right way? Well, let's make sure that when you have tenant buyers who took a chance on you, especially if this is really the beginning, and even though I'm 13 years into my career now as a trained investor, as a professional investor, I still treat myself as a brand new one every single time I speak to a tenant buyer. Why? Because everybody's circumstances are different. Okay, or everybody's circumstance is different. And so I want to make sure that I truly understand before I really speak to them about how this program can actually help them succeed. And so really, most of the times when they come to us, the one goal that they all share is they want to become homeowners. And yet, traditional or institutional lending has been turning them away again and again and again. And so in this particular case, to make sure that we have successful lease options deals, you want to make sure that your goal is always fixed, always fixed on making sure that your tenant buyers successfully execute on their option to purchase, okay? And so the reason why, I know it might sound really simple and like a no-brainer to some of you guys. However, over the last few years, I've just come across so many people that let greed get the best of them. For example, I'm Canadian because I know I have audiences in Europe, in the US, as well as in Australia and New Zealand a lot of the times, and even some parts in Asia. So I'm Canadian. And the last few years, I think globally, especially during the pandemic, in the North American markets, in the New Zealand market, Australia markets, and the UK markets, we all sort of experienced the same thing. There was this artificial boom that kind of happened with the real estate world, okay, and the real estate values. And this is also why globally we are facing upward trending interest rates as well as inflation. Why? Because there was a lot of quantum easing that every single developed country's government put in places. So if you are not sure what quantum easing means, I'm gonna, I'm going to type it out and just do a quick Google search and then share a link with you. And you can feel free to read more into it. However, the point is a lot of the values is actually artificial inflated. However, this is also why we do love real estate as investors and leveraging it as an asset class, because as inflation goes up, the value goes up. And so it creates equity that otherwise would not have existed, that we, once trained, are able to leverage and utilize to its maximum potential and our maximum benefit. So coming back here now, I've just seen way too many investors or amateur investors or greed-driven investors. They're not here to really make a difference and set themselves for the long term. Remember, my entire goal is to help you become a long-term, sustainable, lifetime investor. Whether you're doing a full-time, part-time side hustle just to secure your retirement, creating generational wealth, it doesn't matter what it is, because at the end of the day, financial knowledge and financial education, your level of financial intelligence, and the level of financial intelligence of your kids, your children, your grandchildren, that's really where true generational wealth lives, okay? And so coming back here, a lot of people play the short game because they get carried away. And so I want to share with you, again, at the end of the deal analysis, this is probably going to take about 2 to 3 episodes minimum to complete, because as you can see, I'm really building a lot of foundation and giving you a lot of different perspectives as we go along. However, I want to make sure that we are on the same page about this, okay? Because I've seen people that they are basically flipping tenants or tenant buyers. They pretend to be helping people with this program. However, when the market goes up, they are now regretting, or they're now wanting to find ways to squeeze as much money out of the tenant buyers as they possibly can. And I'll show you how that works, okay? I'll show you how that works as we go through the numbers. So first thing first, as I mentioned, the end goal in mind is always to make sure that your tenant buyers have the ability to qualify and exercise their option to purchase, okay? So remember, episode 31 was when we first started. If you haven't watched that episode yet, make sure you go back and review the first 3 episodes before you continue on. It's very, very important now, because I'm going to start to throw in some jargons and some acronyms, and you need to keep up with it, okay? So option to purchase price is assuming that you have a potential tenant buyer that's gone through your screening process and your qualification process. And you find out that in about 3 years' time, they are able to qualify to purchase something for $650,000. And I'm going to demonstrate everything in Canadian dollars, just because as we go through the deal analysis episodes, I'm going to be using Canadian mortgage calculators. I'm going to be using Canadian rules and guidelines. However, these are the things that you can swap out and swap in with whatever regulations and requirements in your local markets and in the countries that you're in. If you got any questions on how to do that after we've gone through the deal analysis episodes, make sure you DM me. I'm okay, and I'm happy to help you out, because I understand that the rules are somewhat different. It's just that I want to make sure that I build a framework first so that everybody can follow along. So I'm not going to really write down CAD, C-A-D, Canadian dollars in this case, because the thought process is really where it's at, okay? The thought process is really where it's at. And so option to purchase, because remember, it's lease with the option to purchase. That's lease option, and that's rent to own. So option to purchase price, let's say they are able to qualify to buy something in about 3 years. It's $650,000. In Canada currently, because this property by definition is going to become your tenant buyer's principal residence. So a principal residence is basically somewhere that they've declared that they're going to be living in. So that's where all the mail's going, all the bills are going. And from a tax code standpoint, this is basically going to affect whether or not they get capital gain exemption when they sell this property. Okay, so it's very, very important to know. And however, at this point, a lot of people, what they're doing is, because the Canadian government says that if you are buying your principal residence, the minimum down payment is 5%. Okay, Minimum down payment is 5%. So what that really means is if you take out your calculators, $650,000, and you multiply it by 5%, that means, typically speaking, they need to come up with $32,000, $32,500. Sometimes it's actually hard for me to tell numbers in English still. And very much when it comes to numbers, I'm still running everything in my head in Mandarin. I don't know why. Some of you that are watching are also immigrants. I know that. So let me know if you actually share the same thing. So 32,500 is typically what they would need to come up with. And when they do qualify, let's say, assuming they do qualify right now, okay, based on income, credit, down payment, they have the down payment portion checked off, okay, then they will get what we call a CMHC insured mortgage, okay, CMHC insured mortgage. So what that means is CMHC is going to tag on a fee because insured means that there is an insurance premium now the homeowners need to pay for on a monthly basis, or it gets basically added to their entire loan. So more often than not, even though you have 5% down, after this, it kind of looks like you only have about 2% down, okay, especially with all the fees and whatnot. Then so it doesn't matter because this is what the majority of the population knows and thinks. And so what that also means is if you remember who are our ideal or potential tenant buyers, well, we talked about first-time home buyers. This is usually when they sort of get into the part where, hang on a second, I got the 5%. Why am I not able to qualify for a mortgage right now? Well, remember, income, credit, down payment, they got one factor checked off. They may be missing the other two, okay? And so in this particular case now, even though the government says 5% minimum, as educated investors, remember, we're always stress testing our own deals so that any external changes and factors that may negatively impact the final result. And as a result, the immediate performance of your deals, you gotta learn how to shield yourself from that. Again, nobody's got a crystal ball. I always say this, if you actually do have a crystal ball that can tell the future, I'm gonna give you a blank check and write whatever number you want on it. Even if I get into the biggest debt of my life, I will pay for it because then I know I will be able to get out of it. So the idea behind this, that was a bit of a joke. But coming back here though, what we typically do is that instead of 5%, how about we double it? Because in Canada, we've been at 5% for, I think, almost 2 decades now, if not longer, okay? So 5%, what we're gonna do is, as investors, we're gonna say, we're gonna double it up so that it's 10%. So what that means is by the time your tenant buyers is approaching the 3-year end date, they should have accumulated 10% towards their final down payment. And that 10%, when they are in the lease option program, is what we call their total option consideration. Is total option consideration, okay? And so if it's 10% against 650, then we are looking at $65,000. $65,000. Okay, so that is step one. So we know that at the end of the 3 years term, clearly we're going to take the next 3 years to help them rejig and plan so that their income and credit factors are actually checked off, because we know that currently they do have the down payment checked off, but they need to also build that bridge to the $65,000 mark. So what is the next step now? The next step is, what is the shortfall? Assuming that they come across our lease options program, and once they've learned exactly how it works and how we can help them achieve their goal and dreams of home ownership, They said, yeah, you know what? This is exactly what I need right now because I just want to start growing roots right now. Maybe your young family as well. They want to make sure that their kids go to a school district that they want to put them into. So they said, we're going to give you the $32,500 and then we're going to build towards that. So what is the difference now? So the difference is now 65,000 minus that. Funny enough, I think that's another 32,500. Frankly, I just made up the 650,000 because I do this on the spot all the time. So didn't realize that that's the number. So let's take a look at this. If the shortfall is 32,500 again, and they are in a 3-year program, as we call it, 3-year program. So what that means is you'll take 32,500, you divide it by 36 months. What that means is every single month, they should be on average putting away $902.78. So I'm going to round that up quickly and write down 903. So 903. And that number now becomes what we call the monthly option consideration. Okay, 903. So I'm going to write divided by 36 months, just so that everybody's on the same page. Okay, and make sure we can all see this. This is really at the bottom of the flip chart now. So monthly option consideration is 903. Okay, so I want you to just run through the math in your head and everything that we've just discussed so far on this portion. So what this means is that we are effectively looking for somebody that already has 32,500, and that probably will help you do your marketing effort or it'll help you speak to your power teams or anybody that you may come across to let them know, hey, you know what? I am running a lease option program to help people become homeowners who otherwise are not able to. Now, I just want to quickly share this before I finish the episode today. I know I was very, very ambitious about season 3. Every episode should be about 10 to 15 minutes. However, as history predicted it, most episodes are between 20 to 30 minutes. However, I know that a lot of you guys are really understanding and you're actually enjoying. You're telling me that you're enjoying these episodes because it's basically one episode of sitcom. And it's a lot more productive for you to be listening and watching and learning rather than Netflixing and chilling. Okay, so I appreciate that. And I mean, sometimes, you know, I make an attempt to be funny, but I don't think I'm a funny guy. But anyways, I digress. The whole idea behind all of this is that so many people, they are looking at this and they're going, oh, hang on a second. So who can I actually work with on this strategy? Well, my personal favorite has always been mortgage brokers. However, remember, just like not all investors are created equally, not all mortgage brokers are created equally either. In my entire career so far, as an investor myself, executing this strategy, and as a trainer, as a mentor, executing this strategy and teaching my students and my mentees this strategy pretty much globally and having attended physical meetings in several different countries and markets, I've had experiences where they already know what we're doing. They already know the structure. I mean, I haven't walked you through everything yet. However, they already know the structure or they know of it, and yet they're open-minded. All the way to the moment I say the words lease options or rent to own, they basically stand up and go, nope, I'm not doing that. This meeting is over. Get out of my office. So you can see the range because it really doesn't come down to their knowledge level or even their experience level. It comes down to whether or not they are open-minded enough to actually go through the entire process with you. Because I'm not picking on mortgage brokers because every single person on our power team could become a great source of referral for any strategy that we are doing. However, we just align with the mortgage brokers a lot more when it comes to this particular strategy. Why? Simply because they are the professionals that are qualifying people for mortgages every single day. They're the first group of people that find out whether or not they have their clients qualify for traditional lending, or they might have to present an alternative lending solution. Okay. And so the funny thing is when the times are good, everybody's busy. Mortgage brokers are busy. I've been in markets like Vancouver, for example, where they said, I got more deals than I can handle. I don't need to get creative. I don't have clients, that really are that desperate. Or even if I do, I'm sorry, I don't have the time to learn how this works, to build a relationship with you and to refer people to you. And that's totally fine. And yet the same type of people a couple of years later, when the market started to go down and all of a sudden their business is drying up, or like right now, it's harder to qualify for mortgages. And then I go in with my students when we're doing our mentorships. And then these same people are going, oh my goodness, where were you 2 years ago, 3 years ago? Because I could have helped so many people get qualified now. And so that just goes to show, again, not knocking any professional in particular. It has everything to do with mindset, has nothing to do with the professions and the licenses that they hold, okay? Same thing with real estate investors. Like I said, if you're trained by Trust Your Talent, if you are exposed to my daily dose with Tim, I want to make sure that you are always doing things right. That means legally speaking, it is also, in my opinion, the bare minimum. The minimum standards is to do things ethically and with integrity. One of my mentors taught me early on that integrity means doing the right things, even when you don't think anybody's watching you, okay? Doing the right things, even when you don't think anybody is watching you. So it's very, very important because we're talking about money and investing. Some people do let it change them. And yet at the same time though, I want to make sure that we hold each other accountable. And this is why the Trust Your Talent Academy community is so, so, so amazing. We're all here to support each other because again, it is not always rainbows and butterflies. So on that note, hopefully that shed some light and started the beginning of what we're about to embark on the next few episodes, which is deal analysis, AKA finding money and making money. Okay, so have a great rest of the day. I hope that I've answered all of your questions from the previous few episodes today as well. Enjoy the rest of the day. Make it productive. Make it great. Live well, everybody. I will see you back here at the next episode.